the best moving average strategy for swing traders. These are the moving averages we're going to make use of. We're going to use 200 EMA and 50 EMA. Now, this is 200 EMA. It's a long-term indicator, and this is a 50 EMA, short-term indicator. Now, we use the 200 EMA not as crossovers. We use this to detect the direction of the trend. If the trend, we say the trend is bearish, that is down. We say we are in a downtrend if the price is moving below the red, that is the 200 moving average. And we say the trend is bullish, that is the trend is upward. I mean, we are in an uptrend if price is moving above the red, that is above the 200 moving average. So that is what we use the 200 moving average for, to detect the direction of the trend. Then the 50 EMA, that is the yellow, is used to detect, to determine exactly where to join the trend and trade in the direction of the trend. Now, if we have this move below the red, we say we say the trend is moving down. Then we expect a retracement. We expect a retracement towards the 50, towards the yellow moving average. And then once we are approaching, or we get to the yellow moving average, because this is a downtrend, so the moving average is going to offer resistance to price rally, to price movement. It's going to offer a resistance. Now, we expect that around this area, around this zone, we should have a lower close or higher price rejection. Lower close or higher price rejection. That is, as we are approaching this place, around this zone, before we can actually sell, well, we cannot just sell aggressively at the resistance. We need to look out for confirmation, reversal here. So now at this point here, when we see this candle, this very candle, we can see that it closed lower than the previous candle. This red closed lower than this green. Okay, so that is a lower close. Look at the close of this candle. That's 1571, while the close of the previous one was 1578. So 1578 is actually higher than 1571. So now we have a lower close. So what we do, once we have a lower close around resistance, the next thing is to open a short position. So we open our short position at this with this bar, and then that's a good entry. Another way is to look for higher price rejection. This is kind of candle like doji, like hammer, like pin bar. Any candle like that is showing price rejection, either higher price rejection or lower price rejection. So this one is indicating higher price rejection because there is a spike into the resistance, which eventually ended with a close below the resistance. Okay, so this is higher price rejection. All right, so that's also a good indicator for us to sell. That's talking about price action. Now, so at the resistance, we have lower close or we have higher price rejection, then we sell. Open our sell position here, our short position here at the open of this candle, and then the next thing is what will be our stop loss and our take profit. Our stop loss will be, let's say, our take profit. Look at this support. Once we enter around resistance, our take profit should be around the next support, because we are trading swing, so we trade from swing to swing. So this is the support. Our stop loss is good. Our take profit is going to be around this support. Precisely, it's going to be above it, like 10 pips above it. So if the support is 1.1430, take profit is going to be 1.1440. Right. We need to set our take profit above the support so that we can get out of the market before struggle commences between buyers and sellers, or before negative force, that is opposing force, overpowers our trade, our winning trade. So this is our take profit. Then the next is our stop loss. We need to make our stop loss either to be equal to half of the take profit. For example, if our take profit is 150 pips, then our stop loss could be 75 pips. If our take profit is 100 pips, our stop loss could be 50 pips. That's for those traders that use 1:2 risk reward in their trading. And then we can also place our stop loss right above the bar that we entered. We've sold this bar, so the bar that we sold can become, in fact, is going to be the best setup for our stop loss. So we put a stop loss like 20 pips, go the moving average, or we'll use the previous bar. The previous bar which gave us a price rejection or lower close, we put the stop loss at 20 pips above the moving average with respect to that setup bar. So that's a very good way to set stop loss. This is going to give our position, our open position, enough allowance, enough space to break, right? This is a very good way of using moving average when trading swing, right? Honestly, I would have loved to give you more examples, but I believe you may have questions. If you have questions, you can always send a question to me. This is my email. You can always send a question to my email. I'm surely I'm going to respond to you with positive and quick answer, right? And again, before I leave this place, I want you to know that I make money. If you want to make money from forex trading and you don't have required time, or do you want to be making money when you are still learning, I can trade your forex account for you, and I'll charge 30% of the monthly profit. The amount required is just $1,000 and above, right? Thanks for watching. Kindly subscribe to my channel so that I can always update you with definitely I'm going to be updating the channel with relevant stocks that will boost your forex trading career. Okay, until then, stay cool and have the best for the moment. See you in my next video.